Okay, I think I've lost the mic on the other headsets, but we still have a lot of echoes or feedback on this one. So I have no idea what went wrong with the sound on this one. I've adjusted. Hopefully Peter can find out the answer today when we work on the computer again. Okay, today is the end of the month, end of the quarter. This tends to at least freeze or hold the institutional money managers on the sidelines. They don't have a lot of incentive to sell. The focus will be where the stock market closes today as usual, but the world's biggest markets, surprisingly, are not the equities markets. They are government, sovereign debt, treasuries. The U.S. Treasury happens to be the biggest one, and followed by Forex. So those are the two biggies. And there's not incentive here for these people to bang on the market. So we've got, when you come back and look at it, we've got volume down here in the 28 to buck area that really ought to hold the market. And we should find sellers above volume up here. So I'm looking for 8 to 12 to hold as resistance today. I don't think we've got enough to break the market out unless we get some big help from the stock market, then 16 to 20. So our sell one is going to be 7 to 11, and our sell two is going to be 15 to 19. Unless we get some real help from the news or the E-mini, I just don't see how we can make it up to 16 to 20. On the buy side, I'm going to try to buy it on the cheap. Like the news this morning is stronger than forecast. But we may have to pay as high as 5s to get into this, just depending on what the AM news is. So we've got Chicago PMI, and this one is really forecast to be strong at 64. That's a big number, and it does it off the automobile industry, and the sales still look pretty robust right there. So this one could actually come in at 64. And then pending home sales are called, I've seen as high as 1.5%, but Econoday is carrying it at plus 1%. So this will be number one news focus, the stock market reaction to it, and that'll be the number two focus. So it really boils down to what can we do today to break the market out to the upside. I don't think we can without some obvious help from the news. So we're going to sell failure to take out the 8 to 12 area to get started, and we'll adjust post the news. And on the buy side, I'd like to buy 29 sell ones, but we may have to pay 05s again, depending on what the news is. Hard to know what that stuff is with 100% certainty in advance. Okay, looking at the 30-year, same situation. The knob spread stabilized. On Friday it was 12.04. On Thursday evening, yeah, on Friday it topped out at 12.02. We went out at 11.27 on Friday, and it's 11.28 this morning. So it has come in a bit. So we've got volume up here at 7, and we've got volume beneath it. Looks like 23 or 24. So again, 7 to 11 would be sell 1, 15 to 19 sell 2. And on the buy side, we've got support down here in the 23 area. Overnight session low was 28, so only 29 to 25 buy 1. And then 17 to 21 for buy 2. The news remains the same. The news will be more important, I think, to what the stock market does today than to what the financials do. Okay, gold came off over the weekend. Iraq said that the oil flow from the south is still flowing, and they plan to increase it, sell crude. Political instability in Iraq is firming up, although there are mixed reports on whether they were able to take the city of Tikrit or not. ISIS is actively recruiting foreign fighters. They have declared the ISIS state, part of Syria and part of Iraq, as the new caliphate. And there's a lot of meaning in that word to Muslims around the world. Muslims think that theirs is the only religion, and that they should rule the entire world on the basis of that religion, and the caliphate is what they call that world rule. So it's a bit of recruiting for sure, and it's their intent. So we've got both. Okay, right now we've got really, really good support down in this 5 to 7 area. And then obviously we've got to get through 10. So 10, 12 would be buy 1. Market is pointed a little bit lower. Really like the 5 to 7 area for buy 2. On the upside, London peaked at 1570. We're at 14. The overnight session high at 18, so we'll make 17 to 20 sell 1, and 22 to 25 sell 2. Again, I think gold can sell, but I don't think it will break because of the potential problems everywhere, ranging from sovereign debt to political instability, turnover in governments. Okay, the euro held over the weekend. The yen was steady. Everybody pretty well thinks that the dollar is headed down over time, so it's pretty easy to come in and sell the dollar, and we have this pattern pretty much every day. Euro and yen up for a couple of days, dollar down, dollar rallies at the end of the second day or on the third day, and comes back up and regains a little worldwide self-respect, only to sell again. You know, what's interesting about how the governments around the world operate today, it is in a crisis mode, and they use crisis to generate extra, or to be able to raise money or do whatever it is that they want, whether the crisis is manufactured or for real. And in the United States, we go from one scandal and or crisis one week to another one. I mean, they just pile on top of each other, and it makes it easier for those who are in power to increase that power or get extra money for their programs or whatever. So the United States, while we're not in an outright shooting situation or having our country invaded like other countries, unless you count what's going on the southern borders, what the overall end effect is that the government pretty much gets their way, and what was a problem last week gets swept under the rug, or it just kind of disappears into the noise. So the United States, with all of the IRS, the immigrant problem, you name it, allows to keep borrowing money and printing money and business as usual when you get right down to it. Okay, we had a 50 plus or minus on Friday, then a 75 sell, the high is 66. So we've got the 75 sell 1 plus or minus. The market is pointed higher, and then 90 to 137 for sell 2. We've got volume, looks like just below 40. So we'll play for support at 40 to 30 to 40 for buy one, and then our 15 to 25 for buy two. The euro is strong. The inflation news out of Europe was bad. CPI contracted. So Mario still has his hands full on how can he talk the dollar down and, as a true Keynesian, increase inflation to make people think that the value of their holdings, their homes, etc., is moving higher, therefore it's okay for them to spend money. What's missing in Europe, and has been missing for a long time, is jobs. What's missing in the United States is jobs, and a lot of that is caused because of we are adopting a lot of Europe's policies, which don't lead to full employment. Hey, Steve, thanks for the hint. I will take a look at that when we get done. I've gone through the automatic program several times, but we'll see if that helps on it again. Okay, on to everybody's favorite, next to favorite market, crude. And for you beginning traders, crude and gold offer unusually high returns, especially early in your learning career. They really play on a lot of the tendencies that can kill you in the bigger contracts, but because they're extreme examples of go-with markets, and because I'm not saying you get instant gratification on all trades, but you know pretty quickly if you're right or wrong on these particular markets. And then they've got a lot of volatility. The only caveat is that you cannot go into these without stops. I mean, in a blink of an eye, you can be down $1,000, which would wipe out a lot of gains. If, like Rich Genders, your first target in gold is 10 ticks or $100, $1,000 worth of losses would really, really hurt you. But if you will play with stops, and you do follow the rules, they're extremely lucrative markets. Now, the difference between crude and gold is that crude usually doesn't offer the big swings back and forth that you get in gold. Gold is a little bit faster paced. Crude oil is, a lot of people know of it, but not as many people play it as they do the gold market. So you've got a little bit slower reaction, and for the people that experiment with both of them, the cruise is a little more appropriate for those of you that don't want to have to move as fast as you have to in gold. So we're going to sell 105.50 to 75, then 106, 106 and a quarter. And we're going to try to buy 475, let them get stops below 105, 105. And then 425, 450. Okay, for the past week we've been talking about end of the month, end of the quarter, and the E-mini, and how that typically brings us a sideways to higher market. And what I'm hoping for on the E-mini is that they'll give us a head fake. They'll take it down first, then they'll bring it back up. So institutional money managers activity, usually they do a little portfolio maintenance. They'll get rid of some securities that have underperformed. They'll do a little window dressing. So they're replacing securities that they're selling with new purchases. That's usually what happens. There might be a security that has been in the 4, that is in the top 10 performers for the last month that they might want to be able to point to. So there's a lot of that goes on, but typically we don't find selling on this. So what I'd like to do is let them run it down early, try to buy the 45 to 47 area, but we're still in that same situation. It may actually take a 50 to get in. So we're going to try to buy 45s. to 47s, and then 40s to 42s. And I really don't, resistance is at 55, so the first sell is 54 to 56. Really would much rather lean against 60 up here for sell 2. So the close last month is 1921. I don't think we are any danger at all of getting there. Chicago PMI, 64. That's a big number. That would be supportive. The market will like that. Pending home sales plus 1%. That's a big improvement over last month. The market will like that. All in the backdrop of Thursday's non-farm payroll number, where they're looking for 215. And they'll probably get it by hook or by crook, if you know what I mean. So the news is forecast to be positive. A little jockeying, a little head fake. So right here we've got volume in the 48 area. Leaning against that would be on a limit buy, would be fairly aggressive. Then we've got 45, 47 volume. So you can see this 45 to 48 area, we've got the volume. And that would be our first buy zone. And then our second buy zone would be taking advantage of this little volume that's down in this area. Most recent in the market's memory, and a value area low over here. So this would be the buy 2 zone. So I like the stock market today. Would love to buy into weakness to see if we can take out 1955, 1960. If we can't do it, I could turn seller against those areas. So that's all I have right now. We're going to go get things posted. Take about 15 minutes to get around the horn. We'll see you then.